Hi, the Union Budget for 2025 is here, and in this video, we're going to decode some key numbers around it. If you are somebody who's building a career in finance or are generally interested in finance from an investing perspective, this is something you should not be missing. The budget is a key point or a document that comes out every year where it lays the roadmap of what the government's vision is. Government क्या करना चाह रही है, क्यों करना चाह रही है, कहाँ से उन्हें पैसा मिलेगा और कहाँ वो पैसे को spend करेंगे. Where are they going to get the money from and where are they going to spend it? That's all that is covered in the budget. In this video, we're going to try and kind of cover some of the key elements. Stay with me till the end and you will have a good understanding of what was this budget all about, right? Remember, the government's budget kind of talks about what the government's receipts and expenditure items are. They are further divided into what is revenue and capital receipt and revenue and capital expenditure. I've done a detailed video with respect to what these definitions are. I'll put the link for that in the description. Take a look at this and you'll understand some of these elements of definition. But whatever is relevant, I'll keep repeating that as we go along, right? So let's look at where you can get this data. You can go to this website called indiabudget.gov.in. And on this, you will find the information of all the budget documents, all the major parameters or parts of the budget that are available. All of that is available on this website. You can go and download and check and read about it. I have kind of taken out some of the key elements, key points, key numbers, and we will talk about why the government went down this route, what could have been potential or possible reasons, and what is the implication of the decisions that have been taken at this point of time. So let's dig right into it. We will look at this from the purview of what was the budget last year, what were the revised estimates that have been given for the current year that is there, and what is the estimate given for next year. Remember, the budget comes on 1st of February. So while you get the budget estimate for FY26, which is the next financial year, for the current financial year where the budget is going on, you already have 10 months of data. So you get what is called as the revised estimate for this particular year as well. So let's quickly check between the budgeted data and the revised estimate for the current year. Is there any massive difference? So you'll note that, none of the numbers are majorly different with the exception of capital expenditure. Capital expenditure was supposed to be 11.1 lakh crore that ended up with 10.2 lakh crore, or that's the revised estimate for this year. So the government seems to have fallen short on that target to a certain extent. And that may be a little bit to do with what's happening in the economy, a little bit of the slowdown and the fact that the government wanted to keep the deficit under control, right? You will note that the fiscal deficit, which was supposed to be 16.2 lakh crore, is now being revised to a 15.7 lakh crore number. And we are looking at it from the purview of, if I divide fiscal deficit by the GDP, that number arrives at 4.8% for the current financial year. Now let's take a look at the next year data and some of the high level numbers that are there. We'll try and talk about it as we look at it. So tax collections net to the center. This is the net number. Gross number is obviously higher and part of the gross number, as we have seen earlier. 1/3 of the gross tax collection goes to the states. So overall gross tax collection numbers are approximately 42 lakh crore. Out of that 42 lakh crore, 2/3 is what is going to the center. This is expected to increase by a healthy 10%. And so that's a good point that is there. Non-tax revenue, which includes predominantly dividends from RBI and other PSUs, is also expected to increase by approximately 10%. No major changes elsewhere. The expenditure, overall expenditure is increasing from 47 lakh crore to 50 lakh crore, 50.7 lakh crore. And bulk of it is coming on account of revenue expenditure. Capital expenditure does increase from the revised estimate. But if you look at comparing what was given in the previous budget, which was 11.1 lakh crore, and what is being given right now in this budget, which is 11.2 lakh crore, this is basically stagnant. There is no real movement in capital expenditure, right? If you look at growth numbers here, the growth numbers would basically kind of align against the budget estimates and against the revised estimates. So it's good to kind of check both of these. You will note that tax collections are growing, are expected to grow in a healthy manner, both against budget and revised estimates. The only number that basically puts forth a little bit of discussion point is the Capex number. While it is not going down, the trajectory of Capex growth in the previous few years was very high, right? The Capex numbers in the last few years, if you look at them, were moving from, something like 4.4 going up to 5.7, which went up to, I think, 7.5, went up to 9.5. We now have 10.2 for this year, and now next year will be 11.2, right? And the budgeted number for the year was current year was 11.1. So that seems to be stalling. Previous few years, this is in lakh crore, remember, right? So I'm just going back a few years, FY 21, 22, 23, 24, 25. And now for 26, the number has come. The growth rate so far in the previous few years, which was driving the core infrastructure sector growth in India and those sectors in the stock markets as well, was because of capital expenditure growth. That seems to be stalling now. That seems to be kind of stagnating at this point of time. So that's something that, we would want to kind of watch with a keen interest. Also, the government seems to have been much more focused on the fiscal deficit number now, and they've been trying to bring this down. One more point you may want to kind of focus on is the last row in this discussion, which is the nominal GDP data. Last year or current year is expected to be 327 lakh crore. Divided by 86, you will get approximately your 3.8, 3.7, $3.8 trillion. This growth rate in nominal GDP is expected to be 9%, right? And that is something that historically we've been used to kind of seeing at a number north of 10%. Nominal GDP is expected to grow at 9%. These are as per the government estimates. This is an approximation because what the government gives you is the fiscal deficit data. And they say that would be 4.4% of the GDP. So basically 15.7 is 4.4% of something. That something can be derived. That derived number for nominal GDP is about 356, 357 lakh crore. And that is essentially the slowdown is sort of evident in this number. So that's one part that is there. Now, there are various ways to address the slowdown. You could increase Capex. You could basically increase government spending. You could do a variety of things. The government very clearly has chosen to go down the route of giving consumers the benefit and the money. So that's the big announcement in this budget. The fact that up to 12 lakh rupees, nobody has to basically pay an income tax. Basically, the slabs exist, but you've kind of said that till 12 lakhs of income, you do not have to pay any kind of taxes. That is the biggest announcement. And that puts, depending on what income levels people have, anywhere between 50,000 to 1 lakh rupees in the hand, or 1.1 lakh rupees into the hands of people, almost everybody across the taxpayer base. So that's a reward for the taxpayers that has happened. And there are interesting sidelights that are there attached to this that we are looking at right now. When you look at the GDP of the country, remember the GDP as per the equation of consumption can be given by GDP is equal to government spending plus private spending, private consumption, plus business investments, plus exports minus imports. Now, the focus here is that the government collects taxes and then does the spending. But what the government does when they give a tax break is they basically go and tell these segments, the consumer or the businesses, to whoever the tax break is given, that look, you do the spending, right? Because you may spend it in a more efficient way and that will kind of drive the demand. 5 years ago, 6 years ago, when the government did the corporate tax cut, the idea was that businesses step up spending, they increase Capex, and that would lead to job creation and so on and so forth. While that happened, it was hit by Corona in between, and the private Capex actually never really picked up big time. It did pick up, but not to the extent that we wanted it. So businesses were a little bit wary of consumer demand. So what the government has done now is the government has basically given that sort of fiscal boost to the consumer, saying, look, I'm going to cut taxes for you. You don't have to pay any taxes, especially the middle class segment. And you have extra money available with you. Go and please spend this money. I mean, they haven't said the second thing. Their assumption is that people will go and spend this money. When people spend this money, that increases consumption. When consumption goes up, demand goes up for products and services. When demand goes up, businesses are inclined to increase business investment. That should in turn create jobs and then increase consumption further. So the government is hopeful that now you have given a corporate tax cut. You've now given effectively a tax cut to the consumer. While you've not really cut taxes, you've basically moved the slabs upwards, giving that tax benefit to a lot of individual investors, individual taxpayers who are there. That is going to kind of result in increased consumption. And that's a very big move or a departure from previous, sort of decisions that has been taken. Now, interestingly, there is a clear movement in this budget that has happened from infrastructure or Capex that the government was doing, or increasingly doing incremental Capex that the government was doing, that has been taken away. So it's not like expenditure has gone down on the capital expenditure levels, right? It's at 11 lakh crore, which is a healthy number. It's a high number. It's not a small number, but it stopped growing now. And the growth the government is expecting now is by giving this tax break to the consumers. If the consumers spend in the economy, can that revive the sort of growth in the economy is what the government is really betting on, right? Ideally, there could have been a case for saying that, okay, could consumption boost along with a little bit of higher capital expenditure also have happened. So the people who are betting on huge infrastructure spending kind of continuing, they would be a tad bit disappointed with this. But people who are generally looking at this as a consumer-oriented budget or a individual taxpayer-oriented budget, they should be happy with the announcements, because those announcements are really, really positive for the consumption segment, right? So that's basically a way to kind of look at it. That's a shift in the theme. I don't think the government has taken the foot off the pedal of infrastructure, but the growth has stalled. And that's something to kind of keep an eye on. Maybe they could have continued the growth there as well and said, okay, we're going to kind of meet the fiscal deficit targets later. Maybe they could have decided doing something like, a little bit higher disinvestment here. Maybe, a 1 lakh crore, 2 lakh crore kind of a disinvestment. That could have resulted in a slightly higher capital expenditure as well. But that, for now hasn't happened. So we'll see how kind of things go ahead, right? If you dig deeper into the numbers, something other interesting kind of comes out. So this is what you see on the screen is a screen grab of the tax revenue receipts that are there. Gross tax revenue, remember we said for next year is estimated to be 42.7 lakh crore. 42.7. Out of this, 1/3 will go to the states. The remaining 28 is the number we saw here. The number we saw here, 28.4, is the 2/3 of 42.7. That remains with the center. Now, interestingly, out of this 42.7, nearly 25 is coming from direct taxes, which is corporate tax and taxes on income. So these are direct taxes, which now is almost 60% of our total taxes. The interesting point I want you to focus on here is look at what's happening to income taxes. The first column is FY24. That was 10.4 lakh crore, budgeted this year, this current financial year at 11.87. But now the revised estimate stands at 12.57. So the government is collecting nearly 70,000 crore extra tax this year as per their estimates. This growth is 20%. That's a massive growth in income tax collections, right? And the next year projection, despite the relaxations given or the increase of the minimum taxable income essentially, despite that, is expected to grow at about 15% to give you 14.38 lakh crore. So there's something interesting that comes up here. I would be curious to see what comes in the direct tax code, which is going to come in a week or so, whether there are any changes to the long-term capital gain taxation part of this, because this increase is a very healthy increase, despite basically giving almost a very large tax break, which the government by its own estimate said is going to be about 1 lakh crore. So from last year's number, you should take a hit of 1 lakh crore. That takes it lower. And from there, you are jumping significantly. So either the government is expecting massive improvement in compliance, or there are other elements to this which are not yet completely out. We'll have to kind of see how that goes. That's an interesting development. We'll have to keep an eye on it. But the government's expectation is that either by compliance or by income growth, by whatever means or mechanisms, the income tax is going to continue its healthy growth in the coming years, right? Corporate tax rate, they're not so bullish on, and there's a 10% growth expected here. And last year was actually less than 10% that happened. 9.1 lakh crore going to 9.8 is what is revised for this year. So that's an interesting data point that we want to kind of look at. If there are any tinkering or changes coming in the capital gains part of it in the coming few days, we'll see how that comes up, right? Let's pay attention to the expenditure data of the government. So the largest expenditure continues to be interest payments, right? So that's about 12.7 lakh crore. If you look at it closely in the last column, 12.7 lakh crore for the next financial year out of the 50 lakh crore total expenditure. So about a fourth of your total expenditure is interest payments. And that was one of the reasons why the government wanted to control fiscal deficit, because they are saying that our idea is to keep central government debt as a percentage of GDP, either constant or lower in the coming years. So that's how the fiscal deficit targets will move, right? Second largest expenditure was transport, which is roads and railways typically. Now this number had increased dramatically in FY24. Since then, it remained at about 5.4 lakh crore and continues to remain about 5.5 lakh crore. So no major increase, continued allocation in those areas, but no growth, right? And I think the stock market, some of these sectors would probably have been expecting continued growth, and there may be a reason for a little bit of disappointment there. Third largest expenditure is defense. You see, defense continues to grow. This year also, defense expenditure sees almost a 10% growth. That's a healthy growth rate in the defense segment, although capital expenditure within defense is kind of constant. So this may be a little bit to do with other expenditures like revenue expenditures within the defense segment that is kind of going to come up, right? And the fourth one was subsidy. Interestingly speaking, subsidy has not seen any growth. In fact, there's a degrowth in fertilizer subsidy. There's a minor increase in food subsidy. Petroleum subsidy is also lower, or it's constant for the last 2 years. That's a good point that, there's no major increase in subsidies. So the government has basically focused on giving money direct to consumers in the form of the tax, the taxable income slab kind of going up. And that's a big boost in the consumption pattern, essentially, that you do the consumption. I'm not going to give you money directly in a sense, but I'm going to reduce taxes for you for that purpose, right? That's what has happened. Some other segments which you want to kind of just look at from a purview of percentage growth. Some of it you have to be careful is coming on a low base, so may not mean too much. But agri and allied activities, look at budget estimates and look at this year estimates, 1.5 lakh crore going to 1.7 lakh crore. That's a reasonable growth. Education was 1.25 lakh crore. Actually didn't achieve that much, so 1.14, but that's expected to increase to 1.28. Energy sees a spike, almost a 15% jump in energy. Rural development was expected to be 2.65. Actual number for this year is 1.9, and that's basically going to go back to 2.6. Scientific department, small base, 32,000 crore, expected to go to 55,000 crore. So there are sort of changes that have happened in certain segments, although not anything is not very large for you to kind of make sense of, okay, this is a real game changer for a sector. But there seems to be an increased focus on certain areas. For example, even health, you do see about a 10 to 12% increase on healthcare as well, right? Ideally, we would want to see larger movements in some of these. For example, a couple of years back, transport went from 3.9 to 5.2. That was nearly a 30% increase on a very large number, right? We would like to see some of those as well in times to come, but this is what seems to be happening at this point of time with some of the sectors. Interestingly, the outlay on any of the on the schemes like MNREGA, etc., has not gone up. Things like there's a focus increase on rural road development, but the capital expenditure portion for roads and railways is both basically constant. There is no increase, zero growth, more or less. That's why the railway stocks or the road sector stocks may not find it very enticing, because there's a general anticipation that all segments will continue growing, but that has not happened. So let's quickly look at summarizing some of the key measures. No income tax up to 12 lakhs of salary. The slabs have also been widened. So practically there's a benefit for everybody to the tune of anywhere between, you could do the calculations. There are lots of websites giving those. But anybody with an income beyond, let's say, 20-25 lakhs is going to save 80,000 to 1 lakh plus on their data. The upper cap, I think, is about 1.1 to 1.2, somewhere around that. Everybody has that money with them. So consumer sector should do well. The government has specifically focused for a boost on tourism, manufacturing, and consumer segments. Not so great for railways and infrastructure in terms of growth. Allocations remain. They may increase due to some announcements here or there later on. But at this point of time in the budget, no real announcements. The tax collected at source, TCS payment on foreign payments, right? That threshold used to be 7 lakhs. That's been raised to 10 lakhs. Insurance FDI is up to 100% subject to some conditions. So that's a positive. But I think a lot of the firms already were not at 74, which was the earlier number. So not sure if there's some immediate impact around this. There have been a bunch of other announcements, so this is not an exhaustive discussion of what is there. But the key theme that you would want to kind of look at is the government is going down the path of fiscal prudence, saying we will control our spending, but we will try and enable individuals to go and spend. We will try and enable businesses to go and spend. And that is basically what is going to happen. Job creation will remain the theme, but job creation is not going to happen unless basically businesses add capacity. Businesses won't add capacity unless the consumer spends. So the focus is on the GDP equation. If you go back on the GDP equation, remember 60% of our GDP is basically the consumption sector. So 60% of our GDP being the consumption, coming because of consumption, the government would want to give this a boost. But if this gets boosted, then businesses would come and invest, right? You could view it two ways. It's obviously rewarded the taxpayers, and that increases the taxpayer base. A lot of people will start reporting income. Compliance will improve up to 12 lakhs. They may not pay taxes, but the fact that that money that was probably not getting captured by the formal taxation system will now get captured, that could be a boost in terms of compliance. It's a big reward in that sense for taxpayers, right? They could have done a bit more on the expenditure side of things in capital expenditure. I would have expected a little bit more disinvestment and then going into capital expenditure, but that's okay. These things kind of are an ongoing process. All in all, a decent budget. I wouldn't say a path-breaking budget on the overall level. For the consumer segment, of course, it's a good budget, and some of the consumer segment stocks may find it, sectors might find it interesting. Can't say specifically about stocks because a lot of them already are reasonably valued in India. The infra stocks or infra sector stocks may not like this too much purely because there was an implicit assumption of growth built in there. And this year we have taken a pause here, right? Much more to sort of dig into this. So I would urge you to go and look at the documents, read about it. If you have any questions, please put them in the comments box. I'll try and answer that. If you have any suggestions about the video, please give that as well. That's it in this particular video. Thank you.